My name is Danis O'Donoghue, and I'm the Chief Risk Officer and Head of Risk Management at the China Construction Bank for Canada. The China Construction Bank, I'm not sure how many of you are aware, but it's one of the world's largest banks, currently number 2. About 4 to 5 times the capital footprint of the Royal Bank of Canada. So from a capitalization standpoint, it's massive. Number of clients clearly exceeds anything in any North American bank. It's an excellent opportunity for me in the latter part of my career to be involved with a bank that has a very firm and very clear risk appetite and is looking for investment opportunities in Canada.
Hi Dan, thank you so much for your fantastic introduction. My first question is, could you briefly tell us a little bit about your career journey in the field of risk management?
So throughout my career in banking, which is about, I'm an old guy, so it's been 35 years or so. I've worked at only 2 places. So I've worked at the Toronto Dominion Bank for the earlier part of my career and now the China Construction Bank. I have worked across all 3 lines of defense. So I've worked in the front office as a lender. I have worked in the retail part of the bank in lending, in the commercial and in the wholesale part of the bank in lending. I've worked in an auditing function periodically, so I've been able to see risk from the third line as well. And for the last 20 years, I've been in various risk management tasks, including risk oversight for mergers and acquisitions. As the global head of model risk, I saw all the various types of AI, ML, all the different types of recent acquisitions the bank have made. And I also spent a period of my risk management career designing the models that the bank uses to approximate risk. So as the head of model risk management, part of the team validated models and the other team designed and deployed models. So it led me to China Construction Bank, where I am today, and I manage all risks.
That's really awesome, Dan. So I have another question that is rather more technical. Given the current 40-year high inflation, the rising interest rates, the fear and the threat of a recession, as most people are talking about, people are not even concerned about soft landing of the economy, as it's seemingly impossible. So how can risk management in the current situation play a role to help the bank navigate through this period of volatility?
So, excellent question. And it's something that comes up on a regular cycle. It's never smooth sailing. We're always around the corner from the next big disaster, the next recession, the next downturn. Look at the fears around the onset of COVID and what that would do and how the world would never be the same, and yet we made it through. From a risk management perspective, and really consistently with my partners in the business, we're very careful not to make bad loans during good times so that we can make good loans during periods of economic downturn, bad times. Our approach is consistent and our appetite remains consistent. We want to make sure that we look at the borrower's opportunities in a market. There are lots of opportunities that smart companies take advantage of, and we want to be there to partner with them. It's even more important when we're in a period of economic downturn or pressure that we clearly understand not only the risks that are in front of us, but the top and emerging risks around us. It's risk management's job to try and look to quantify unknown risks. So I'll try and give you an example. So when the pandemic first hit, we needed to be out in front of the new types of risks. So what happens if all the customers completely go away from a business? How long will that last? What will the impact be of government intervention and government sponsorship for a longer period of time? What about for real estate customers when they have no more tenants and no one wants to come back to the office? So those are emerging risks. and they've not yet impacted the bank's results. So risk management works to quantify those results through different forms of stress testing.